Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, August 11th, 2016. In this video, I just wanted to tie in some of the things that I posted recently on the site that I'm watching for, waiting patiently for, as far as sell signals go. There was a question put to me in the trading room the other day. I forget the exact verbiage of the question, but it was something to the effect of, the markets are going up while you're making the bearish case now. And what I do, it's my style. I'm a trend anticipator, not a trend follower. If a trend is strong enough and get in there, and you can get in on pullbacks and bull flag breakouts, bullish pennants, bearish pennants, continuation patterns, I'll certainly trade those. But at this point in time, as I've stated, I think the risk reward on the long side is very unattractive, despite the resiliency of the recent trend. And the cases I've made on the site in static post over the last few days, I'll put here. And just on that same point, let's just take a look at the daily chart real quick. The reason that I try to anticipate trends, and each and every one of these instances, you can go back on the site. Just at the very top upper right-hand corner, there's a plus sign. In the uppermost right-hand corner of the site. Click that, pulls down a calendar. You can go back and check the archives. I was on the site, both personally, officially, short here at the top, and caught that rip. And here's my point: that trend followers, those waiting for confirmation of a trend, if you can't get in front of a trend, especially in a market, a fast-moving market, and to catch the bulk of these quick gains. That's why I love short side trading, as well as getting in bullish falling wedge patterns that are explosive and catching the bottoms. But again, you can reference on the site short here, covering at the lows, on this day here, covering again here, trading long side bounces, short at the highs here coming into the beginning of the year with official shorts and personal shorts, covering on the initial trade move down, I believe reversing long for some trades there, again covering, and I'm not talking days after, usually the day of the low, and being short. Now the thing with the quick moves down, you have to be very fast, and again you can reference, just compare the dates on your chart with the posts on the site. Now a lot of those were covering, you have to be real quick, and then when you have a wedge and patterns like this where a reversal appears imminent, it can continue to build for a while. So then there's usually a scale-in process. But all of a sudden, when the market tends to break, or when things look very objective, you'll see a flurry of trade ideas come out. And again, we were short almost all of these going down. I remember, the day of Brexit, for example, covering my shorts because the market was at resistance, particularly the small caps, which was the only broad market short I believe that I had at the time. And that is, now this I will say I've missed the bulk of this move up, but just because I missed it doesn't mean I'm in denial that, okay, well, the market's gone on and made new highs here, the QQQs. I've made many cases or many reasons why at this point, this market may want to go up another 10%. And if it does so, and I'm speaking in generalities here when I say this, it can do so without me on the long side. Now I trade, as I made reply to somebody in the trading room today, I trade long and short. That doesn't mean at every point in time I have long and short positions. There are times where I'm not actively engaged in the market. There's times where I'm flat in cash. But I trade, different asset classes, many of which can go up when the broad market's going down and vice versa. So that's something to keep in mind. And by trading long and short, even if you're trading closely correlated asset classes, that's also a way to hedge. In other words, you don't want to blindly buy longs and shorts. They're going to wash out. In other words, you don't want to be long the SPY and short the Qs. That's a wash. You're hedged, but why not just be out of the market? However, if you are long the most bullish trade setups, let's say even with stocks within an index like the Qs, and then short the most bearish setups, then you can actually make money on both sides at the same time. So that's just a little sidebar here, and this is where I see us at. I can see this, MACD ready to make that very large divergent high, confirm that on any reversal. And guys, I pointed this out before. I pointed out these oversold readings. They're not marked on this chart. I used another chart. Maybe it was the SPY or a different chart on the Qs. I'm sorry, not oversold, overbought, like we are here, like we were here, like we were here, like we were here. Each and every one of those. This goes back 2 years, and you can go back as long as you want. when you are at especially extended overbought readings like this, I'm talking on the daily RSI, reading above 70, that is just not an objective level to go long. It's not a sell signal in itself, we say, because we were overbought here, can and often does become more overbought, especially in an uptrend. However, it's just stacks the odds in your favor. Stacks the odds, I should say, against additional upside, and it also significantly raises the odds for, again, just go back in time, look at your own chart. I put one up the other day. You look at the move leading up looked identical, and I'll get a clean board here. The moves leading up to these overbought readings were very sharp, even usually more sharp on the downside than the few weeks leading up. In other words, you can take it, and I'm just randomly grabbing a point here. That occurred over 12 days, wiped out 6%, and that took you back to where you were 22 days or a month earlier. That was, 1 month, 22 bars, and I'm sorry, that was 12 bars or 18 days. So you can see stocks often fall faster than they rise. Here was a nice little rip up, similar to what we have now, a little larger magnitude. This current rip up was close to this rip here. And that one did result in this. However, we had a very sharp rip here, and then we had that flash crash in the Qs. We had an equally sharp rip back here, and that was the top. At the end of that rip came a very fast sell-off, usually not allowing longs enough time to get out or shorts to get in. We happened to have another pushback. That was a golden, shorting op. But it was also a very frustrating time. I remember trading that. We were in that sideways range, but then our sell signal came on the first trading day of the year, and after we broke below that range, and you can see that the downside is very fast. So from this point, if you even just wait to the New Year's gap, I call it, from that point, in just a matter of 17 days or 12 trading sessions, we wiped out gains that took months to build. And if you go down here before it was all said and done, the market dropped 15% in just 1.2 months, which is 24 trading sessions. And that took us back to levels that the market hadn't been at, if you exclude the flash crash, going back all the way over here to the left. Now that's 1.2 years. So wiped out in just a short period of time, a year and a half of gains. And that's all I'm trying to say, guys. When this reversal comes, based on this move, based on the fact that rip is up into overbought conditions, based on the fact that the RSI is the MACD is rolling over on the Qs, it's already crossed over, made a bearish cross on the SPY. This to me is just a powder keg waiting to explode. Now let's get into the charts, and we'll wrap it up there and tell you what I'm looking for. Okay. These are the 60-minute charts. These are the sell signals I'm waiting for. We only had one out of all the three that I put up. I put up the SPY, the Qs, and the IWM recently in the last week or two here. And I listed levels and things that we needed to see. Now, we had in the SPY, we had a brief whipsaw signal in the trend indicators, but that was not confirmed with the Qs. And I say this is very important. Even if you're only trading the SPY, you must keep the other, especially the major. When I say the major index, I'm talking the SPY and the Q really are the two that I follow the most. The Dow's only 30 stocks, disregard it. You can look at the NASDAQ composite, but you don't have a tracking ETF for that. That's why I use the NASDAQ 100, the QQQ, and then to a lesser extent, the mid caps and the small caps. Mid cap is a symbol MDY. We'll look at that in a second. Small caps, you have IWM. So what's going on here? We're above the support levels. These are the levels I said we need to see go, and we need to see them go on all of the indexes. That's what I'll cover today. So we had that brief whipsaw signal, but it was not confirmed by the other indices. And here we are again. The divergences have only grown larger. One way for me to phrase this, a few weeks ago, back here at these bearish rising wedges, I was bearish at the time. They were confirmed. They had divergence. I was bearish then, expecting a correction. At this point, I'm now expecting much larger correction, possibly a mini crash or a very powerful meltdown, only because the same bearish technicals that were in place at the time were not negated. They've only extended. See, we had a divergent high back at this point. It's not drawn from here on that peak, and now we have a much longer extended high. The market, although it's not going down, it's really not going up. If you look at where we were going back, at the beginning of July, now, a month ago, we're barely above there. We're just a little above that trading range. The divergences continue to persist. We're only a few big 60-minute red bars away from confirming the trend indicators that I'm looking for. This 1333 and that 9 EMA going below the zero lines, as well as this break below 12 of 215.30 on the SPY. Now that needs to also be confirmed with a breakdown in the Qs. The Qs are getting away. They have quite a bit of room down to that 114.12 level I'm watching for. I think that's an important level for the Qs to give way. But I'm also looking, shorter term sell signals will be these uptrend lines here. You can see the divergence, how powerful it's grown on the Qs. Just because we continue to go up doesn't change the technical outlook. In fact, it's only made it again more bearish. Now, if things continue on up and these divergences are burned through and all these indicators go on to make higher highs, it changes the technical outlook, and it can certainly, dissipate or negate that whole bearish outlook. But unless that happens, this is just a storm brewing, and like I said, it's only going to lead to a more powerful move once we finally, if and when we get those sell signals. So there's 114.12 with an early break. Early signal would be a break below this ascending price channel, and wait to see these trend indicators go bearish as well. So there's the Qs. Mid caps, MDY, you can see a very similar ascending price channel. See, we had these fake outs, these false whipsaw, these breakdowns. There's that price channel. We broke down, but we back tested those recent highs, and that is the level that needs to go. We have to take out these previous reaction highs there. So on the MDY, it's 278.80 needs to go. And again, an early sign would be a break of this channel. And if and when we break that channel, we're going to put these trend indicators back on bearish. And I always say that, whipsaws, these signals, these trend indicators are not perfect. Nothing is in trading. There's not any one single indicator that is foolproof. Especially the faster indicators. We're talking a 60-minute here. When you go out to weekly and monthly time frames and using trend indicators, your whipsaw signals are very rare on those, but then again, it takes so long to get confirmation on those trend indicators that it's not practical for swing trading and timing your entries and exits. It's only good to confirm the overall trend. So that's what we're looking at, and you can see we're just right there. One big red candlestick, two big red candlesticks, a break of these supports will probably put those trend indicators there, and then you'll have to watch to really get a very solid sell signal where you want to be, in my opinion, or at least for me, aggressively short is once these levels go, because we may just thrust down here, back test those levels again, because that is pretty good support right now, and then we could bounce from there. So let's see if those levels hold, and I think we'll probably get a waterfall sell-off. We'll probably have initial reaction there, but just based on everything I'm seeing in the charts, I think it's going to come pretty fast, and it's like a game of musical chairs. There'll probably be a rush for the exits once the momentum traders realize that momentum is now finally over. So here's the IWM, the small caps, beautiful negative divergence, beneath this ascending price channel. We had, like everything else, a little whipsaw signal there. False breakdown, came to backtest that high, and that was a level I wanted to see go before on IWM, and I still do. So now it's only further validated with, you have this gap right here, that previous reaction high, and that was that former target, first target area needs to go, so around 118.60 or something like that. So again, look for a breakdown. We had this minor uptrend line after that whipsaw, and we're below that. But trend indicators need to flip to bearish. We need at least a break below this channel, and then ultimately a break under that lower end of that range around, well, it's actually 118.54 is where I have the line. All right, let's wrap this video up by looking at the top four, not necessarily the top four components of the Qs, the four that I'm watching. Most importantly, these are 60-minute charts, and these are the same ones I put up yesterday. Let's watch for trendline breaks here, because if these leading stocks in the NASDAQ 100 go, the NASDAQ, which has been the strongest index, which when the SPY and IWM trigger those false sell signals, the NASDAQ didn't even come close, the Qs didn't come close, and that's why, again, you want to wait for all of those, or at least the SPYs and the Qs to break down. If the QQQ and SPY break down, the small caps and mid caps will get dragged down kicking and screaming with it because they're going to follow the large cap stocks. All right, so there's Apple. I mean, we're just flirting on the line right now. And, at this point back here, when we had that big whipsaw signal, it almost looks like a bull flag, a little bit long for it. But we didn't even have a divergent high, as you can see at that time. This time we have very powerful, very clear negative divergence in place, and a very extended uptrend line, and that's why at this point, I think the risk reward to chasing alongside breakouts isn't very good. They're more likely to fail because this thing looks ready to pop at any minute. And then Apple has a little work to do on the trend indicator, but let's look at a couple more. Here's Google. And again, these trend lines are fairly well defined with quite a few reactions. I have this little sub uptrend line within Google, or Alphabet, I should say, that I'm looking for a break there. Will be the first sign. We found support on it today so far, actually a couple times. So look for a break of that minor uptrend line, and then more importantly, a break of the primary uptrend line on the 60-minute chart here. That's support there around 767 really defines the bottom of that range, other than that one spike down. And then there's a big gap to backfill, and this is a key level. Once Google takes that out, 735.70-ish, that would be quite bearish. Microsoft has already broken down from this rising wedge pattern, similar uptrend line on the 60-minute chart. Made a back test today, divergent high. Trend indicators are still bullish, but like I said, getting close to a crossover there. And then I'm not sure if I put up Amazon yesterday. Maybe I did. Either way, it's one to watch. Let's tighten that trend line up right there. And you can see bearish rising wedge pattern confirmed with divergences. Just waiting for a breakdown on all these names. And the last one here is Facebook. 1, 2, 3, now 4 reactions actually just broke through, and his back testing from below, just hugging that trend line on the downside. There's this alternative trend line I have here, and I've had this one for a while that we've actually Facebook found support on. So it really needs to turn down and break, let's just say, to be safe below today's lows, or about the 124.50 area. But again, all these together, if you just see one breakdown, that's not enough. You need to see these leading stocks go as well as the indexes, and then most likely they'll go together. I can assure you, if all the Apple, Google, or Alphabet, Microsoft, Amazon, Facebook, they all break below these trend lines, you're going to see the Qs break at least below that ascending price channel. And that's sell signal number one. If you want to get an early jump on it, you can certainly, if you don't have short exposure, you could take some there. But again, until we take out these highs, these recent highs, you probably don't want to go to a full short position, because these are only 60-minute charts, and they may be good for just a short-term pullback to test those highs, the recent highs. But again, big but, is that the daily charts really really look ripe for a very, very significant pullback here. I have a different board here. Let's go to that. There it is. You can see the negative divergence. We're still on buy signals here with the trend indicators, but these divergences are very large. They continue to build. I've showed this on other charts. I don't have them all shown here. Most of these other major highs were all preceded by similar divergences. In fact, some of those weren't even as big. Point being that this 60-minute charts could be the catalyst for a much bigger move, because it will certainly confirm these divergences. And then, after, depending on how we play out on the 60-minute charts, any shorts taken there on this first pullback could morph into much longer term swing shorts. Or, if you're bullish and if the market's bullish, might just want to go back and test that recent high, that breakout in the SPY. And that would be, and I can just tell you right now, if you're bullish and think the market's going to new highs, you want to jump in with both fists there and buy any pullback to even close to test the new highs. And it might even go, I've mentioned this before, breakouts to new highs I often see come back through that level, the previous highs, just kind of fake everybody out. I would probably allow for a move down to 212.88 if you're looking to position for a retest on the breakout on the new highs on the next correction. And, there's your longer term bullish case, but I don't see it. I won't be doing that based on these divergences, at least not at this point in time, but I'll watch everything. I'll watch the nature of the pullback if and when it comes. I'll watch the intraday charts, the 15, the 60-minute charts, and leading stocks. There's just so much that goes into it. But all right, let's wrap it up there. Anyways, guys, I do think, I know there's a lot of frustration for those looking for a top or already short, or at least just looking for a pullback. I do think it's coming, and I do think it's coming very, very soon. Any day now. But again, these are what you want to, the sell signals that we need to see to increase your confidence, to go from either maybe a fractional short position or nothing, or if you're long, stay long. I know a couple of you in the site are bullish and long. Stay long until you get these sell signals, and that's probably a warning sign that all right, the party might be over. Okay, guys, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.